Then let's just get started with 4.1, which is day 4. We are looking at setting up fixed assets. So in this learning module, I will be taking you through how to set up fixed assets in Xero and how to create and register fixed assets and update fixed assets in Xero, depreciate fixed assets, and review and reconcile fixed assets. So it's one of the key important element in accounting, where if you spend more than 300 or whatever, so that's the basic tax rule. If you spend more than $300, that particular thing needs to be capitalized. So you differentiate if it is an expense or it has to be capitalized and recognized as a fixed asset. Such things like fixed assets needs to be depreciated. You cannot claim the entire depreciation in the profit and loss. So it has to be divided in a periodic time frame, and the depreciation needs to be posted in the profit and loss account. So today we will be looking at what fixed assets are, why do we need to put it in Xero, and what's the purpose, and things like that. So going back to our a bit of the timeline, what we've been through. So we're day 4. I will spend a decent amount of time trying to understand the fixed assets, and it's not really hard. It's pretty easy. It's just that, again, going back to the calculator formula, just putting all the data in, and then the system does things on its own. Okay. So just coming back to the dashboard of the demo company, and the fixed assets sections you'll find in accounting come to the very end. Fixed assets. In case if you have not started, you can go back to reports, view all the reports, and go on to fixed assets. So because if you've got fixed assets already, so I'm just gonna go show you the dashboard of fixed assets, how it looks, and all of that stuff. And then we will add a new fixed asset, run some, get some account charts, new assets in, and then later we will sell the asset and then see how the capital gains and things work. And then at a later stage, we will run down certain reports just to check what we have posted is correct. And then you will have a complete understanding of it. All right. So this is the panel. This is how it looks like. So we are on drafts. I'm just going to hide this, not necessary. So we've got 2 assets here in draft mode, and then we've got 2 registered, and we have never sold any. So this is the total figure that shows throughout in the business. So I'm just going to go here and register these assets. So if you click on a laptop, what Tracy has bought, it's an equipment, right? So it's been categorized to computer equipment as an asset. The purchase date, the purchase price. This is an asset number, what the system does generate for you. And you put a name so that you recognize the next time. And these are the asset account that it is allocated. So it's allocated to computer equipment. And this is where the depreciation will get accumulated. And this is the depreciation account 416 and 721. If you want, you can put some description in. And for book value purposes, we're using the diminishing value. And the rate for it is 40%. So I'm not going to run down the rates for now. I'm just going to stick to the basics. The reason is every year the rates changes for tax purposes and all of that. So do not need to necessarily put effective lives would be 4 years for most of the electronics. So you can use the chart from the Australian Tax Office, the depreciation. So this is the book value. And there should be a tax value as well at a later stage, right? So I'm happy with all the figures and just want to register this asset. As of now, it was on draft, and at the same time, I am going to register this as well. And these are all office equipments. I'm just going to click register. It's going to register straight away. Now, it's part of bulk register formula. So you just go say, yeah, register. And then we don't have any assets to register in draft, and all is available here. So we've got office equipment and computer equipment. So if you go on to the balance sheet, update to today's date, it should give you a bit of data. Why there's no data to display? Let me just refresh. Yeah, so yeah, there you go. If you look at office equipment, there is only 750 here. And what's the other one we were looking at? The depreciation. So I would say this is not posted correctly. So you can also generate go to accounting reports. It'll give you all the reports for that financial year. And I wanted to look at the fixed assets reconciliation. That'll be somewhere here. So this is where the financial statement. So you could just check what has happened, where the differences is causing. Well, yeah. So balance sheet we've got 750, but in the asset register we have not put this balance in. The reason for this is a demo company, so it's all made up for us. So I'm just gonna put today's date because we did some transactions in. I couldn't check the date. Yeah, hopefully it should give some figures. Okay, cool. So here is what we were looking at. So we've got asset register 8,469, and then for office equipments also we've got 18,300. So I just wanted to make sure that there's no differences here. So I'm just gonna add 6,500 for computer equipment. I'm gonna run down a manual journal for it. So how you do it is just go on here, manual journals. Just doing it to make the books right, and then later stages, you can allocate. So that's what matters. So just I am putting the manual journals to get the demo company right. To get demo company right. Dated as I'm gonna go with today's date, 26th of 7 2025. Okay, that's there. And how much of computer equipment? 6,500. Computer equipment, you debit 6,500. And then we've got the differences is huge, pretty huge, eh? Yeah, so the difference here is around 11,250. Office equipment, not expenses. 11,250, I assume, is it? 11,250, yeah, that's right. And for these purposes, we'll just put it to suspense account and post it. Because it's just a makeup, so I'm not trying to be on point. So that's the journal. And that has been posted. Yep, so being depreciation, obviously meant to get the demo company right. Okay, so that's posted. I'm trying to get it updated, and now that you can see that it's all equal, this is how it needs to look. Whatever the balance sheet items, it should be in the asset register as well. So the reason why I use asset register is to make sure that it depreciates correctly, and at times like when you sell an asset, the capital gains are calculated correctly as well. So that's the only purpose why we need to use fixed assets account in Xero or any other softwares. So you don't deal with it, let the software deal with it. So that's why you put stuff in the register. Okay, so I'm gonna show you going back to fixed assets. So I think we've got 4 assets now, and this is the breakdown for that total. On the other hand, let's just say you bought an asset, you paid $10,000 and you bought an office equipment 10,000. When you do that allocation from the bank, like we saw in the previous one, automatically the balance sheet item will have a 10,000 and the asset register will not have that 10,000. So you will manually come and put in the fixed asset register so that it balances out. So the balance sheet also has 10,000. This also has 10,000. So you know that you can run the depreciation reports. So it'll work it out. Okay, so we've got registered thingy here, and then no disposals. Okay, so once you come to this stage, have a decent sort of understanding, I would want you to go here, click, and go on to settings. So this is where you know the different types of assets you have, computer equipment and office equipment if you want. And these are the accounts that the balance sheet has, 724 that, 710 for this, and different accumulated depreciation for each. And we've got a depreciation expense account. This is where the depreciation from in the profit and loss will be posted. Okay, cool. You can add new asset types as well, which I will then show you a bit after I go through these. So these are the accounts where the journals will get posted to the capital gains on disposal, the gain on disposal, and the loss on disposal. Cool. And then the tax reporting. You would need to set up a tax reporting date. Okay, so I wanted to add motor vehicles in here. So because that's not there, motor vehicles. Select an account. I don't think we've got motor vehicle accounts. So if you do not have, you need to create an account. It can't be blank. I don't think we can create from here. So how do you create an account? So you go here, accounting, chart of accounts, and add account type 744. Sorry, that's the account type. Fixed, you say it's a fixed asset. Account code is 744. And you say it's motor vehicle. No need description. And there should be GST on expenses for motor vehicles when you buy, and then save it. That's 744 under assets. You would see as yeah, there you go, 744 fixed assets. Okay, so we don't have any figures here. So as soon as you put that account there, you need to make sure that you create an accumulated depreciation asset as well. So 745, and then you'd say accumulated depreciation of motor vehicles. So this is where it'll get allocated. Vehicles, okay? So you don't need, so it's pass excluded always. I'm just checking if they had a different account for accumulated depreciation. No, so it has to be fixed assets, okay? And then save it. Or if you have any doubts, you still can come here. So this is also list accumulated depreciation on office equipment, BAS excluded. So yeah, I just wanted to make sure that it looks pretty exact. So you say less less as well, like it is on the other one. The tax rates and all of that, you could see there's GST on expenses. We recommend also pretty much the same. Okay, cool. So once that's done, we try to refresh this so that it picks up whatever that we've recorded. Right, so I'm just going to type motor vehicles and account type 744 motor vehicles. Accumulated depreciation is 745. And then depreciation accounts, it's always the same one, 416, what we've been using. I'm going to go with, these are different ways how you can, depreciate an asset. So ideally, most of them use the diminishing value. So it's a lot in the start, and then as it goes on, it gets reduces. And then we've got straight line, which is the same amount over a period of time, or the full depreciation at purchases. As of now, at the current trend, we've got less than any assets up to $20,000 can be depreciated straight away, depending on the company turnover. If it's more than 10 million in turnover, you can't do it. It categorized as a large business. Any small businesses can depreciate it. During the COVID period, we've got a lot of temporary expensing, immediate write-off, things like that. So I'm going to go with diminishing value, actual date, and the rate for motor vehicles is 25%. Okay. And then save it. Okay. So we've got that new assets as motor vehicles here. And then the second thing you would need to do is create an account for this capital gains. This happens when you make a sale where the capital gains or losses needs to be posted. Ideally, you need to create a revenue account. Just follow the steps. Add account. Go to the very end, revenue. So you can choose any code as you like. So 222, you would say it as profit/loss. All the businesses use the same thing on sale of non-current assets. Okay, that's pretty clear. So you don't need GST on it on the sale. You'd say BAS excluded. Cool. There's few things happen when we do a sale. I'll show you. First, we need to generate an invoice. That invoice might include GST, but for these purposes, you don't need. It's BAS excluded. So you save that. Get that accounts created. Come back here. Refresh again so that accounts reflects. You can type 222. There you go. And all these accounts needs to be the same, which then shows everything rather than showing individual accounts for profit, loss, and then the realization. So you have one for everything. And when you do a sale, you can just go in and check where the differences has caused. So you save that. And then for tax reporting purposes, you need to select a starting date. So I'm going with the 1st of July. That's the financial year begins. And also you can reset it as well if you want. So that's the first kind of things you need to do. And this is the depreciation pool. I don't want to touch base on this much. It's a bit of a broad scope, but as a beginner, I don't think you need to know this. But at a later stage, you should. but for this tutorial and learning purposes, I'm not going to touch base on this, right? So we've got motor vehicles set up, and I'm going to I'm going to post saying that we have bought a motor vehicle in the financial year. So ideally, you can get this amount through an invoice as well, or maybe there can be a bank transaction saying 50,000 gone out from the bank, and then you can allocate it to motor vehicle, saying that you bought a motor vehicle. And there can be scenarios where they have bought a motor vehicle under a hire purchase agreement. So such scenarios, you need to post manual journals. It's hard, or you can't post because there's no cash transaction happening. It's every month you make that hire purchase repayments, and then first you need to record the purchase. So I'm gonna post a manual journal for this. Depending on the contract, the sale invoice, you could see how much the vehicle costs, how much is the GST, and how much is the borrowing cost, and how much is the loan, and a few other things. So you hit new journal. So now we are recording the new purchase of Hilux, for example, and the date of the purchase is 26th. I would say it's the 5th of July. 5. Cool. And the account is motor vehicle, not expenses. This is a profit and loss, and this is a balance sheet. You bought it for, let's just say, $20,000. Amounts tax exclusive, BAS rate, GST on expenses. So that's 2,000 added on top. And let's just say loan amount. I don't think we've got an account for loan. Ideally, you need to have a loan account for this. So I am just going to create a loan account. Asset type, account type, sorry. It's a non-current liability. What's the code that we've been using for non-current liability? You could just come to liabilities and check the codes that just takes place. It all starts from 8. So add account, non-current liabilities, 840. Do we have that? That's gone. So you can try 841. Yeah, that's available. So let's just say it's a finance from paper money, where that's where they borrowed money to buy that Hilux. Paper money, loan, paper money. Okay, I hope it's clear. I'll save it and then come back. I don't think it'll have that figure, so you might have to refresh again. Okay, the refreshing is there. Purchase Hilux, 5th of July 2025, and motor vehicle 744, 20,000. Tax exclusive, BAS, GST on expenses, and you'll have that loan for paper money. So that $22,000 you borrowed is because this is even though it's 20,000, it's 22,000 is all up after GST. But for assets purposes, when you put it on the AST, you put it always GST exclusive. So you put 20,000 there, because that's the amount that's going to come up here. So ideally, the journals are going to be motor vehicles 20,000 and GST on expenses as an input tax credits 2,000, and then the credit is 22,000 as a loan payment. Okay, once that is set up, post it. So we've got that asset on our balance sheet. Yeah. Yep. It's loading. So as of today, so we posted on the 5th. Motor vehicles, we've got 20 grand here. Cool. And then the rest would have been posted to the GST account there. The $2,000. So I want to go and record the fixed asset on our asset register. You go onto the asset register. New asset, asset name, Hilux, and then put the rego number there. So you know which asset we are talking about. The purchase date, I set it up as the 5th of July, and the purchase price is always 20, excluding GST. It's 20,000. Asset type, it's a motor vehicle. Serial number, region, you can add all of that. So once you select motor vehicle, it automatically picks up, which is the asset account, accumulated depreciation, and the other one. And again, for this book value purposes, it's all populated. So when you select the account, it all comes in. So this is the original thing that I set up, rate 25, and all of that. So I'm just going to go ahead and register this. So we'll have 5. So we will have a new asset here saying $20,000. So I wanted to show you that report which we generated earlier, so you would know what I talk about in the reconciliation, fixed assets reconciliation. I think it was somewhere here. There you go. Fixed assets reconciliation. See, for this financial year, that's why, because there's a lot of events happen after that period. So you know that the balance sheet asset, we've got 20 grand, and then for the fixed assets register also we have 20 grand. So always this has to be nil. If there's any differences, you need to investigate where it's missing, and then you need to add that bit. So there's no differences in any of this. I wanted to go ahead, and then we purchased it on the 5th, and then now I wanted to show you how to sell that asset and how will it reflect on the books. So this purpose, first you need to raise an invoice for the capital proceeds, which is for the amount that you're going to get paid. So I'm just going to click this. You can click as an invoice there as well. So I'm selling it to ABC, or maybe you have a new person, so you can put that I'm selling for John. Okay, we don't have a contact for John, so create a new contact for John, and then we are issuing the invoice. We're setting it on the 25th of July. Ideally, it's not much. We're buying and then we're setting it back again. So 25th of July, due date is, it's not necessary. Australian dollars, tax exclusive. So now you'd say, here, account as profit and loss. This is where the account is, because it's a sale of a non-current asset. On the description here, you can put as sale of Hilux. So you know, for record keeping purposes, it makes it tidier. So you need to put the price here. You bought it for 20 grand, and then you got a good deal to sell it for $25,000. Okay. So let's just say this. John's, he's running a car dealership, so he's happy to buy with GST in it. Sorry, GST on income. So we're selling for $25. We charge $2,500 from him as GST. So the total figure here is $27,500. Okay. And then we say here as approve an email. I don't think the emails would work. So this is how it will look like. So it's review and pay $27,500 for that particular asset sale, the invoice template and things like that. Send a copy to myself as well, where you get an email for yourself, and then send email. I am sure it's not going to work. Even though I add an email address, it's never going to work. Yep. So yeah, it doesn't. Invoice email didn't send because of the plan that I am in. Okay, so once that's recorded, that's already recorded, and you can mark as payment received. So we've got the paper money loan here, 32,500, and the assets there as 20,500. And whatever that we posted, the 27,000 is the accounts receivable. So it should be in this account. Should be 27,500. There you go. For John, we sold the Hilux for 27,500. So if you select that transaction, you can see that details that we put in through as a sale of Hilux for 25,000 with 2,500 as the GST, and then payments are waiting. Okay. So at the same time, you can take a look at the profit and loss as well. So it's sold in this financial year. So on the trading statement, we've got, because we posted it to 222, ideally you can put it through to under the sales. I don't know what account this is under, so you can choose. It goes on in an ascending order, the number, the chart. I can just show you. Account codes, update. So 200 is a sale. Okay, now it comes in an order. Okay, that's great. Okay, so we've got $25,000 in sales as for that particular thing. But is it right? No. It's money coming in, but at the same time we purchase, we need to depreciate, and then we need to sell. Okay, so that's what I'm going to show you now. So you go here. So this invoice is already posted. Go on to the dashboard, accounting, fixed assets, and then go on to registered. Select the Hilux thing. So we have all the details. Now that you say you are selling it, dispose. The dispose date was yesterday, and how much is the capital proceeds? 25,000. That's how much you need to put. You do not include depreciation. Sale proceeds account always profit and loss, because this is the account that we allocated when we actually selected the invoice for the sale, and you have to depreciate up to and including to the sale of the assets. That's yesterday. So from the day of the purchase, 5th to 25th, there will be depreciation, and then the sale will take place. So you can show summary, which will show you what it's going to do on your end. So the cost is 20,000. That's what we bought, and depreciation is posted to 25th of July. It's 287 is the depreciation, and then sale proceeds is $25,000 is the sale proceeds, and the gain on disposal is 287, which is the depreciation that we posted here, and the capital gain in that purchase is $5,000. So all up, the gain's going to be 5,287 pretty much. Okay, cool. Review your journals. So motor vehicle is going to credit. There's going to no motor vehicle. The depreciation, whatever that it's going to post, it's going to get reversed, and the profit on sale or profit and loss on the sale of the non-current assets is going to get debited $25,000. That's the debit things. And then on the other side, we've got gain for posting to 222, which is 5,287. So that's the actual gain in the profit and loss. So I'm gonna go ahead, which looks all right. So we have already got 20,000 in it, and that's going to get debited, and the remaining balance will show up. Okay, so I'm gonna go ahead and post. So that's the sale amount, and then now what I'm gonna do is I'm going to run the depreciation report. So that's how you run at the end of the year. So from 1st of July 2025 to 31st of July, we've got computer and office equipment. There's no motor vehicles anymore. We sold it. So this is the depreciation for that particular month book value. So that's how it calculates. Okay, so if it's asking, you want to confirm. And there's another option here as rollback. We could roll back the depreciation as well for 1 year. So click confirm. Okay, so the depreciation is posted. So there's no depreciations to post. Just want to show the updated version how it looks like. So now it's pretty much clear on the books. Now that the actual profit and loss on that non-current asset sale is 5,287. And if you go on to the balance sheet, as at today, you will not have motor vehicles on the list. We've got office equipment and computer equipment with no motor vehicles in it. And the profit and loss shows here as 5,287. If you want, you can just click onto it to see the detailed postings for that finance for this particular period. So we've got the receivable invoice credited as an income, $25,000, and then it cuts off as a disposal of assets, and which then gives you the accurate capital gain on that particular sale. So which is actually a profit of 5,287. Right? And also, you can also check the depreciation here. That's the system posted. So the depreciation account debit, and then there's depreciation credit on the other side. Okay, so that's pretty much about the fixed assets thing. I just wanted to show you some reports before I finish off. Right, so you come here and you can check back the fixed assets reconciliation for this financial year update. So you do not have any differences. Now that for motor vehicle there's none. Asset register also got none because we sold, and the balance sheet also we have none in it. So this is how the accounts will look like. And then at the same time, you can also run another report for the disposal schedule. So this is the disposal of the motor vehicle that we had. Depreciation recovered to 87. The capital gains 5,000. You can view that. You can export a PDF or you can export it to CSV as well. And you can run the depreciation schedule as well for that period. Yep. So we've got depreciation 287 for motor vehicles and for office equipment. This. Total is 493. The depreciation, that's what we've looking at in the profit and loss account as well. Just wanted to show. So these are some of the checks that you need to do to make sure that the accounts that's totaling is correct. Depreciation 493.02, 493.02. So these are the reports you would check. And yeah, so that's about the fixed assets pretty much. You buy, you sell, you record on ASC, you run the depreciation, and you select the accounts chart as I advise how to add new accounts, new asset types, depreciation, and things like that. And coming back to your certification progress, now that you should be very comfortable with Xero to understand where is what. And also when you start applying on a daily basis, when you do these transactions, you get more comfortable down the line. So you'd come to set up and manage fixed assets. Whatever I've explained is what you will do in a daily basis. There can be certain things that are outside the scope, which I don't think you would use it if you were supposed to use it. I would have definitely covered. If there's any areas that I have missed, or if you think that you should know and you want a deeper understanding, just put up a comment on the description. I'll make a YouTube video, post it just for yourself and the rest of the world, so they can also understand the accounts. So you go one by one, get all the questions answered, get more understanding, and get to that stage. So so far so good. So you have completed day 4 as well. And day 5 and day 6 is so simple. There's nothing much, just few random reports and how to get that right. So I think now that you are complete, you know how to run the show, you know how to do bookkeeping for a client. If you get a client, if you are an employee, if you are studying towards becoming an accountant, you know how to run the show. Except pay runs, because I cannot touch base on pay run because that's a huge broad area to go on, running pay runs, pay as you go withhold, super payments, superannuation rates, and things like that. So I cannot cover it up. So I've got another complete course on pay runs, which I have all the detailed parts, that how to run a pay run, how to reverse a pay run, how to make payments, ABF file, and superannuation calculation, the payables, the due dates, the deadlines, and employee reimbursements, any expenses, deductions, employee salary sacrificing. It's a huge broad scope, guys. It's if you can understand that, you can easily land a job in payroll officer, or if you are an owner who is watching the video, you can start processing pay runs for your employees 10 or more, 20, with full-on confidence. Trust me, it's that good. So far, I think you should have a deeper understanding about how Xero works, how the codes, invoices work, supplier bills, making payments, how the bank transaction work, how to reconcile transactions, if you have any issues, how to get that verified, sorted. And now that you have an understanding about fixed assets, how to dispose, how to sell, how to buy, how to run depreciation, I think that's the basic idea that you need to understand here. And moving forward, there's a bit of pieces of information that needs to be known. And then once you figure it out in day 5 and 6, at the end of the course, you will get your certification as a Xero advisor, which is like a know-it-all person. And yeah, you can't be know-it-all. I'm sorry, so every day is a learning day. So yeah, so I'll see you on the next one on review and adjusting transaction and customizing reports. And yeah, thank you very much.